Thanks for tuning in to Look at My JPEG, the podcast that discusses NFT, DeFi, and NFT financialization. This is your host, Xerox Jose, the founder of NFT Perp. The reason why I want to do this podcast is because there's just not enough people talking about NFT financializations. In this podcast, you can expect us to invite guests that are builders, founders, even investors that are deep in the NFT financialization space. We'll discuss their story, what they're building, and how you can get involved. So thanks for tuning in. Welcome to episode 13. In this week's podcast, we had a conversation with Reservoir. Reservoir is a protocol that grants you open and permissionless access to aggregated NFT liquidity. Its open source protocol lets you create custom marketplaces, see data and analytics, market making, and much more. Let's dive straight into it. Hey, Jason. Yeah, we can hear you fine. How are you doing?
Doing good. How are you doing?
Doing well. Are you in New York or did you come to Portugal?
No, I'm actually I'm in Santa Barbara, California.
Okay, got it.
Yeah.
Well, good having you on. Is it just you from your team today?
Yeah, just going to be me. Yeah, and appreciate it. Super fun to be here.
Awesome. So let's before we jump into it, Jason, I'd love to if you can give us a little intro of yourself, how you got into crypto, and then we can kind of talk about what Reservoir is doing.
Yeah, totally. So yeah, I'm the head of research at Uneven Labs, which everybody probably knows best for building Reservoir. I actually did my PhD in economics at UC Santa Barbara, and was studying something kind of entirely different, but on the side was really following crypto and kind of just watching to find an opportunity that I felt like really compelled to participate in. And when I started seeing NFTs, I really just had that kind of aha moment where I felt like, wow, this is like such a killer, just new primitive for the internet, and really wanted to start figuring out how I could participate in that. I actually really got looped in because one of my really good friends who also works at Reservoir, Michael, kind of got me into the initial loot boom, like really early on when loot minted. And that was kind of the time when we decided we wanted to start building something. And so we actually started sort of building in Web3 by building a marketplace for the loot ecosystem called the Loot Exchange. And, that was kind of started us down the journey of like meeting Pete from Uneven Labs, really starting to think about NFT marketplaces and, like the future of what we see as kind of like this unbundled, really like pluralistic NFT market ecosystem. So that's kind of like my basic background.
Oh, that's quite interesting. I did not know about the loot exchange thing. I'm on the website right now, and there's like a wizard in the middle. There's a knight on the right, and the left side there's a little. Yeah, it's really cool.
Yeah, so like I think that's really what started like the vision for us, where we kind of felt like loot is such a good example where you go to OpenSea and you see these images that just have text on them, and you completely miss out on the entire context of the NFT. And what we really felt like was, you should be able to build a marketplace that contextualizes the NFT collection into the browsing experience. And, that's kind of where we started on this like community marketplace kick, which, has really evolved into working with Reservoir to support many new community marketplaces as one of the kind of use cases of Reservoir.
That's quite interesting. Is Loot Exchange still operational and there's still community and stuff happening around it?
We've kind of moved away from Loot Exchange a little bit. I think it still does work, but we've been underneath. We've been working on the API so much and kind of pushing along there. I think we would love to get back to it and kind of fix it up a little bit, and maybe that's something we'll get back to.
Okay.
Yeah.
So tell us a little bit about Reservoir. I think from a Reservoir, to me, it's a developer centric and business to business protocol, and for the end user, I think very rarely they will come across a direct user interface for BDC products. So
Yep.
tell us a little bit more, big picture, what Reservoir is, and then we can kind of dive into each pillars of the products you guys have.
Yeah, totally. So I think the right way to think about Reservoir is that it's a developer-focused NFT aggregator and order book, right? So basically what we do is we go around the NFT ecosystem, we grab all of the NFT liquidity that exists on, say, like SudoSwap and OpenSea and LooksRare, many other places, and we aggregate and normalize all that NFT liquidity, and then we surface it in APIs and an SDK that allow builders to interact with that liquidity as easily as possible to build their own products and protocols. So this might be like a community marketplace, as an example, or like an analytics app because we have really great data. Like the original, again, like I think the original use case to think about here was like a community marketplace, right? So when we were building Loot Exchange, one of the things that was really important was that we were actually connected to the rest of the NFT ecosystem in a liquidity sense. We needed orders from OpenSea and LooksRare. And the reason is because, otherwise you're in this world where you have a really severe cold start problem. And the problem is basically that you have an empty order book, right? And so nobody's going to come and use your community marketplace if they don't have the best prices. So aggregation gets you there, where you can go and you can get all of the liquidity from across the ecosystem. Then you can surface really great prices to your users. One interesting thing that I'll point out is kind of in this community marketplace vertical, what we've actually seen happen over the last few months is, in addition to using aggregated liquidity, what we've seen is that these people that are using Reservoir kind of as their order book are actually starting to use it directly to create their own native orders, right? So like a good example here, one of the best performing marketplaces built on Reservoir is called ENS Vision. They're ENS domains specific marketplace. And I think they're doing something like 50% of all ENS domain secondary sales, and about half of that is actually native orders that they're creating using the Reservoir system, but that are actually native ENS Vision orders, right? So they can create their own orders with their own fee structure. They can put them into the normalized Reservoir order book. Those obviously get resurfaced back to ENS Vision because they're using the Reservoir system, but those also get distributed across the Reservoir ecosystem. One of the things that I think is actually kind of compelling there is there's actually 2 ENS domains or domain specific marketplaces built on Reservoir, and they're actually kind of sharing liquidity through the Reservoir protocol, right? So like there's Rare ID and there's ENS Vision, and both of these marketplaces are creating their own orders and sharing ENS domains liquidity across them just because they're both using Reservoir basically.
Wow, this is interesting. I have not come across. First, I didn't know you guys have this, like a community-focused marketplace. And two, like, what's the reasoning behind this? Like, why would a collection or a community want to have their own marketplace? Like, how is that better than like a Blur? Because if you go to Blur, I do have aggregated liquidity for a single collection if I click on a filter.
Yeah.
So what's the USP here?
Yeah. So first off, just to clarify, like ENS Vision is their own team, right? They're just using Reservoir as a product. And I actually think this is the right thing to happen. So, and just in terms of what like the benefits of a community marketplace are, I think what it comes down to is a couple things. One is the community has control of the fees, right? So in a world that we live in right now, where we're like, communities are rightfully concerned about royalties. If they can bring users to their community marketplace, they have the ability to control the fee structure of the orders that they create, right? So they can create orders with royalties in them, for example, right? Another thing has to do with the context. And this is where I think you're going to start to see a lot of verticals being built out where you can actually create a marketplace experience that's much better than what you can create in, what we call like a horizontal marketplace world, because you're able to focus on the context of the collection. So a good example here would be the reason that ENS Vision is so successful. I mean, they're a great team. They've built a lot of great features on the marketplace. I would argue that one of the reasons that they're really successful is because they've really focused on this idea of clubs, right? So like ENS, like the 999 club as an example, right? You have like an ENS domain that has like a really short set of numbers. Well, this is a piece of metadata that isn't available like on the token. So you actually have to bundle this and create your own understanding of the metadata. And they're able to do that and create all these clubs because they really know ENS domains. And so they can create the experience of, okay, these are the tokens in the club. This is what the floor is for that club, because they understand the tokens really well. And so they're able to create an experience that works really well for this. Another example that I think kind of paints this picture really well is we work really closely with this team called First Mate, and they recently just launched in collaboration with Sound, the Sound XYZ marketplace. And so this is built on Reservoir, and there, I think what you can imagine is, music NFTs just fundamentally have a different browsing and buying experience that they should elicit than the experience that you get on OpenSea, right? And so being able to focus on this vertical of like music NFTs allows you to build a better product for your end user.
Right. Thanks for covering that. I think the ENS part really spoke to me because if you go to Blur, if you go to Gem, or even OpenSea, and you want to buy specific digit, like 3-digit, 4-digit numbers, ENS domains, like there's one called 10K Club, which is, like you mentioned, it's 4-digit numbers, ENS domains, and they're really popular. I think at its peak, the floor price was quite high. Now it's hovering around 1.25, but it's extremely difficult to filter them out on centralized, on other marketplaces, as far as I know. Maybe I haven't, found the right way to do it, but yeah, that's really interesting. So to kind of jump back to Reservoir, so what you guys are offering is API across different marketplaces. So you can build an NFT marketplace aggregator on top of this. You can have your own vertical, your own order book, where developers can control where the order book and fees, how they get charged and whatnot. I think one of the things that we talked about early on, prior to this podcast, was also you guys have this very interesting protocol you guys deployed called Forward protocol that specifically address the market making problems. And I'd love for you to kind of dive a little bit deeper on, maybe we can talk about NFT liquidity. What do you think of the liquidity in general? What that looks like? What do you think the problem is? How do you think Forward solves those issues? Love to kind of take that direction.
Yeah, of course. So just to give you a little bit of background on kind of that line of thinking. So, we started working really closely with a number of teams that were building these community marketplaces and sort of building out these marketplace verticals. And, the thesis of Reservoir, I think one really easy way to frame it would be to think like NFT liquidity everywhere, right? Like I think you can imagine a world where not only do you have lots of different vertical marketplaces that cover music or cover IP or cover all sorts of different things, but you actually just have NFT liquidity integrated into things that don't really even look like a traditional marketplace, right? So it might be that like you're playing a game and you click on something and you want to just be able to buy something new. And, like because of that, you kind of need to have access to the NFT market across the Web3 experience. And so that's just kind of like a little bit of framing. One place where we've seen over the last few months a lot of interest, which people might not traditionally think about as a place where NFT liquidity belongs, is from wallets. And I think the UX from a wallet perspective interacting with NFT liquidity looks something like this. You go to your wallet, you open up your NFT portfolio, you're looking at all of your NFTs. Some of them surface data to you about the floor price. Some of them don't. I think in the future, what we're going to see is a world where in most wallets, next to each NFT that you own, there's just a button that says sell. And that button is just connected to the best bid in the NFT ecosystem, right? You should just be able to instantly sell your tokens out of your wallet. Like, I think it will become table stakes in the same way that a lot of wallets have integrated swapping, ERC20 swapping into the UX, right? Like, it's just going to be the case. Like, what is your wallet if not a place to, have access to selling your NFT out of it? Like, I think this just fundamentally makes so much sense. And this is backed up by our conversations with wallets that want to integrate this type of feature.
Is that through like a web extension, like a Chrome extension wallet, like a MetaMask, or is that through a mobile app? What are you guys thinking here?
Yeah, so I think, maybe one of the things you're pointing at is some of the like regulatory issues here. I think like in a perfect world where you didn't have like a 30% Apple tax, this would just be integrated into the mobile application. And I think there will be, workarounds in the meantime for sort of getting around those types of things. But I think fundamentally, there's no reason why it couldn't just be integrated directly into that, into the app itself.
Sure.
And so, in the long run, I think that's probably where it will end up going. Now, I sort of brought this up to paint a broader picture. And the picture I wanted to paint was, we have all this interest from wallets coming and getting bids from the NFT market. And we basically started this big initiative at Reservoir to go and aggregate NFT bid liquidity from across marketplaces. And one of the things we noticed is that, bids, historically were pretty bad, right? And, we started asking ourselves, like, why are bids so bad? Now, I think, the ground has shifted under our feet a little bit as this, over the last few months, as things have kind of progressed in the ecosystem. But if we can like frame ourselves back, 3 months where, OpenSea is like the really dominant marketplace. I think what we started to realize is, bids were sort of fundamentally limited in their ability to provide good liquidity to end users. And this was kind of going to be a problem if we wanted this thesis to play out, where we really think that, the experience of an end user is one where they have access to instant liquidity, that, retail are takers, not makers, this kind of idea. And really, when you think about the problem, there's kind of a couple issues, but one of the main issues is that bids or like liquidity provision is typically done by professionals or people that are coming in and they want to place a bid to give you instant liquidity. They're a market maker. They're just crossing the spread over and over again in order to pick up a little bit of a fee. I mean, this is how it works in traditional markets too, right? Basically, if you go to like a major, any type of exchange, be it in traditional finance or Web3, increasingly the person that you're interacting with when you actually buy or sell is just a professional on the other side that's making the market for you. Okay, so that's sort of the context we're in. Now, what happens on OpenSea if you're a market maker? Okay, well, in a perfect world, two retail people on OpenSea find each other, right? Like Sally and Bob. Sally wants to sell, Bob wants to buy. They find each other in the market. They pay one OpenSea fee and one royalty, and they exchange their NFT, right? Now, what happens if Sally wants instant liquidity? Well, now there's a market maker that's facilitating the interaction between these two people. And what that does is it breaks a single transaction between Sally and Bob into two transactions. Sally to the market maker to Bob. And as a result, this new set of transactions has two fees and royalties, right? Because the market maker interacts with the seller, a royalty and fee is paid. A market maker interacts with the buyer, a royalty and fee is paid. And what this means is that for somebody that wants to be a market maker, they have to be bidding at least a fee and a royalty below the floor price in order to just break even when they're making the market, right? So the bid just looks bad. And that bid that's a fee and royalty below the floor, the seller is actually getting a fee and a royalty less than that, right? So you're talking about like a pretty severe spread between what the seller is actually going to get and what they're listing for, right? Now, so our idea there was basically to say like, okay, is there a world where actually we should be acknowledging the fact that market makers provide a service to the market? And the service that they provide is that they're providing liquidity in exchange for a small fee, and they're connecting to retail buyers in the market. And so in this world, like I think one way to frame this problem is to say, what we want the market making system to look like is we want it to look like they're facilitating the trade between Sally and Bob in a way where the market maker wasn't necessary at all. And so our idea was to say, well, if we can come in and we can build a meaningful way for the market maker to forward the royalty on to the buyer, then what we can do is we can make the two transactions that result from the market maker facilitating the trade look as if Sally and Bob found each other in the market to begin with, right? And so the basic way that this works, we designed this protocol, and the way it works is a market maker comes in, they bid with this protocol called forward, and they place a bid into the forward order book that Sally can see. And the reason that she can see it is because it's integrated into the Reservoir ecosystem, which is going to surface these bids into wallets, surface these bids into other marketplaces that are built on top of Reservoir, and other sites. And when this bid is accepted, rather than the market maker getting it and being able to go and sell it wherever they want, the NFT is actually escrowed into an on-chain vault. And because it's escrowed into this vault, the protocol can verify that when that token is then sold, a royalty is paid. And as a result, what we can do is basically facilitate this single royalty and fee payment across this market-made transaction. And I think, one thing to ask is like, how does this perspective evolve when we start to think about the fact that there are lots of marketplaces that don't have royalties anymore? I think the conversation has shifted a bit, and happy to get into like sort of how we think about royalties, et cetera, because it's somewhat relevant here.
Yeah, I think look, like we're probably talking about Blur here, and we're probably talking about some marketplaces that have previously tried to remove royalties, but now have kind of gone their way back and implemented royalties again. I think there is fundamentally a race to the bottom in the last 3-4 months, maybe even 6 months, of marketplaces trying to gain most market share, volume, and therefore waive fees, try to incentivize volume with different campaigns of airdrop and whatever. And the goal is to, acquire as many users as possible. But ultimately, I personally think maybe I'm missing something, but they have to make money at some point. They have to charge a fee at some point. And the creators won't put up with this forever.
Right.
So I think it will come back at some point, right? Unless they find a brilliant way to not charge a fee and still make it a relevant business, it won't. It just can't sustain. So I think either way, it's going to come back, and I think forward in those cases could still help in a very meaningful way for market makers to not get killed on both fees.
I totally agree. I mean, I think that's a great point, and I also tend to agree that there's kind of this narrative in Web3 where like race to the bottom, zero fees, and then you just have to ask yourself like, how are these businesses going to make money? I mean, I think you can prop yourself up on a token for a little bit, but ultimately not sustainable in the long run unless you kind of keep this cycle cycle going with development of new protocols, et cetera. Um, but I think like, the reservoir thesis, which fits in with forward here, I think is just like I have a pluralistic view of the NFT market. Like I really think where we're going to end up in a year or 2 years isn't in one place, right? Like it's just fundamentally where we're going to end up is a world where there's lots of different solutions for different types of NFTs, for different specific situations, for different creators, right? Like it may be the case that in a year, what we find is a lot of creators actually are using a different mechanism for value capture, and they don't feel like they need royalties, or they only need a little bit of royalties or something like that. And I think there are other people that are really gonna want royalties. And it just, at the end of the day, I think what we're going to see is that there's just different situations for different people, right? Like as an example, I think one of the places where forward is going to be really useful is we're going to be able to, and again, this depends to some extent on, exactly which application you're talking about, but for applications that want to enforce royalties, but are willing to make an exception for market makers that can make the market under the conditions that they're going to charge a royalty on the second trade, right? These bids are going to be able to go to end users in places where royalties are fundamentally enforced. And I think that this is good. Yeah. This is good, right? Because those people then get instant liquidity and the assurance that the market maker is going to find somebody that's willing to pay the royalty. So if you have a wallet, for instance, that wants to, enforce royalties, but they're okay with this exception because it's in line with their ethos around royalty enforcement, but also providing good liquidity, then forward makes a lot of sense, right? And one of the supportive actions that we've done at Reservoir is we've actually basically made it possible to make every order royalty compliant, right? So if you go and you look at some of these community marketplaces, we actually surface aggregated liquidity, even orders that don't have royalties on them, but we add the royalties on top for the marketplace, right? So we make it easy to get all the liquidity, but still be royalty compliant, right? And I think what we're going to find is we're going to end up in a world where the situation is just different for different people. Some retail buyers are going to want to enforce royalty, or are going to want to pay royalties, some aren't. Now, I hate to push on the creators even more, because I think in general the creators have kind of gotten the short end of the stick here. Like they didn't make the choice to forego royalties. But I will just say this. I think ultimately royalty enforcement and the willingness of retail and collectors to pay royalties, kind of that responsibility of making that happen rests on the creator. And I think basically what needs to happen is creators need to make it worthwhile to pay royalties. And I think this is actually a lot simpler than it seems. So here's just an example, right? Like, we know who is paying royalties and who isn't. I think creators it's in their interest to levy the benefits of the collection to the people that are paying royalties. Right? Like if you don't pay royalties, should you be able to access the Discord? Should you have access to the next airdrop? I mean, these are the types of things that fundamentally are, simple solutions that might make a world of difference in driving collectors to actually want to pay royalties in the first place. So, I think ultimately that's going to be a big part of the puzzle, is like supporting creators with tools that help them make royalties worth paying to begin with.
Yeah, I mean, that's an interesting. So I have a personal experience with this, right? Like I joined this this Discord community called In Peaks. And this is like a Web3 education courses focused community. Like it's like an education platform. I bought one of their pass on, I think it was on Blur. Because it was just one of the cheapest one out there, right? Like there's no different rarity. It's all the same. It's just a pass that you can token gate it. You can get into a token gated Discord community, and you can learn a lot about different things and network. So long story short, I bought this from Blur, and then later the creator found out that Blur is not, attributing any sort of fees and royalties back to the company, which is their current way of revenue, right? They don't have other revenue sources besides the mint.
Right.
So for them, it's a total bummer, right? They're like, we're gonna block them if you buy, if you bought or sold
Right.
NFTs from those marketplaces. You're not gonna get any, we'll know who you are, and you're not going to be invited on Discord. Basically, lose all the perks and access.
Right.
Which I didn't know. It's just like
That's
that NFT was available on Blur, and I just bought it. Like I didn't even know that wasn't a thing, right? And a lot of times it's the seller who exit the position set no royalty because he wants the full payment when listing get through.
Totally.
And ended up like the person who buys in gets fucked over. Luckily, I think she implemented the rule after I got in, so that was okay. But it was kind of a weird experience, right?
Yeah. So
you're right. I think
that's a total bummer for you, and I think that like, that's probably, arguably a problem with the tools that are available right now, right? Like, I think there's kind of two things going on there. One is like, you should be able to add royalties on top to any order that doesn't have them to begin with. I think the other thing is, at least the way we've envisioned kind of being supportive of the royalty movement at Reservoir is, let's say you buy a token and it doesn't have royalties on it, and like you kind of don't know that this happens, and you kind of decide, oh man, like I really wish I'd paid royalties. You should just be able to, fix the NFT, right? You go and then you pay royalties later, and now you're back on the good side or whatever, on the list of people that can get like that's the kind of system you want. Like she should be referencing a list that, is updatable. Like if you bought one without royalties and now you want to opt in, you should be able to do that. And
here's the owed amount, basically.
Right. Yeah, exactly. Yeah. Like, let me go fix this. And like to be fair, I think, oftentimes in these conversations, these, like Blur or just market makers in general kind of get a bad rap. Now, I think you do have in the NFT market, like people are worried about getting rugged. Like there's just a lot of like fight for, for making money, et cetera. But I think part of the idea of Forward also, and part of the conversation that can be really helpful for understanding what's going on, is just the acknowledgement that actually, price discovery, market making, these are good things for the market, right? So we actually don't want to end up, like I would argue, and creators might push back on this, but I would actually argue that ending up in a world where every transaction has a fee and royalty in it is also not good for the ecosystem, right? Like just think what that fundamentally means. Like a royalty and a fee on every transaction, it is fundamentally a transaction tax. If you're talking about 7, 8, 10% fee on every one, like yes, the creator gets value there, but if you think about it from a market perspective, this is bad. And the reason it's bad is because you have low levels of liquidity functionally because of transaction fees. This leads to volatile prices, right? Much higher risk of entering a collection because you don't know what you're going to be able to get when you exit, right? So like these types of things are actually bad for the creator and the collectors, I think, right? Like if you want to push the ecosystem forward, you need a world where like if you buy an NFT for 1 ETH, it is going to be worth about 1 ETH in a week, right? Like right now you can buy an NFT, there's no bid side liquidity. You buy an NFT, you're already out 10%. And the floor could crash 50%. Now, I would make the argument that a lot of this has to do with the fact that you don't have professionals, you don't have good price discovery because you have such high fees. The thesis of Forward and where I hope the ecosystem moves is just one that acknowledges that different actors in the ecosystem play different roles, right? So if you're levying benefits to collectors that pay royalties, what that also allows you to do is give access to traders and market makers to make markets and earn a little bit of a fee for price discovery because they don't care if they get the benefits, right? So like, let's let those people do that. It's good for the ecosystem in a lot of ways, but then, also give the benefits to collectors who really care about what's happening with the collection.
Yeah, because these traders or market makers don't necessarily opt in for the NFT perks, whether it's token gated events or the Discord or any sort of airdrop, for example. So
Totally.
yeah, I tend to agree in terms of efficiency of markets. That should be taken care of. And I think like we're on very far end of the spectrum right now with different marketplaces with their different you know strategies, right? Like
Right.
OpenSea has been heavy on fees, heavy on royalties. And Blurred's on the very far end of the spectrum where they're only focusing on speculation and the ease of traders, but kind of forgot about the creator royalty side of things.
Totally.
And I think finding somewhere in between is pretty important. And one of that, the important thing to do is just kind of like you said, separating different roles, how markets, how participants interact with the marketplaces.
Totally agree.
Yeah. Okay. Thank you a lot for kind of uncovering all of that. I think that's something that maybe a lot of projects or communities don't think about, and it's incredibly important. What are your thoughts on? So this is something I'm incredibly curious on. What are your thoughts on OTCs? What are your thoughts on? Because the entire market's been pretty efficient, focusing on bids and asks, and I think OpenSea has probably 3 types or 4 types of currency accepted. There's ETH, and there's obviously like the wrapped ETH, and there's I believe there's USDC. There might have been DAI at some point. And there's also Ape at one point. Might still be active. What are your thoughts on bidding NFTs with NFTs?
You mean just basically opening it up to like both other ERC20s, but also non-fungibles?
Yeah, like other ERC 721s or 155s.
I mean, I think it makes a lot of sense. I mean, we just, we focused on some of this sort of more on the ERC20 side recently. I think from if you're talking about like sort of like a classic NFT swap kind of perspective, I think there's a lot of value here. I think there are some challenges from like an order book perspective in terms of like how you surface these. It probably need to be like kind of fundamentally separate. It's not exactly clear how much the swap is worth, things like this.
Yeah.
But I think it's a great. I think ultimately it's a great feature, and it's something that that probably needs to be focused on. I guess I'd be curious if you have a sense about like how big the market is. I mean, it's a little bit hard to like get a good perspective on how you would actually quantify something like that. But do you think that there's a lot of interest there? Or like, what do you think like the major use cases? Is it just like I have this this token in this particular collection, and I would trade it for any other token in this subset of tokens in that same collection? Or do you think it's kind of like cross collection trading?
Yeah, I think it should be permissionless enough that it could be both.
Yeah.
Like if you think about if I have a Moonbird, which I do as my PFP, and if I want to trade up, but there's not enough liquidity on OpenSea or other places for me to say to exit and add a couple more ETH to swap into that.
Yeah.
Like, ideally, I would love to place a bid with my own Moonbird on the higher one and maybe add a little 0.1 or 0.2 ETH on top of it, and someone can just say, "Oh yeah, I'll change it for yours. I like your Moonbird better than mine." And ideally, you can do that with separate different collections out there. And if you think about like how this could be applied for like some gaming assets, like I have this pretty decked out skin, but I want to swap it for other gears.
Yeah.
I don't want to go through a marketplace because the liquidity is pretty thin. Let's do a direct swap. I mean, that's why a lot of OTC existed, right? Like OTC platforms like, SudoSwap V1 was Sudo V1 was, I guess, pretty similar to that. But yeah, I thought that, bidding with different assets would be interesting.
Totally. Yeah. Okay. I see where you're coming from. I mean, I think it makes a lot of sense. I think there's kind of a couple things that come to mind. One is like, the problem is probably like in a world with good liquidity, the problem is kind of solved for you, right? Because you can just like bundle a bunch of trades together in such a way where like, you have, let's say you have 5 NFTs, including your Moonbird, and you want to get a rarer Moonbird, right? You could basically see that Moonbird that was listed for more and like, liquidate your 5 tokens and use that to buy the Moonbird all in one transaction kind of thing, right? So like in a world with more liquidity, the problem is probably less severe. Now, I still think that you're right that, we're probably not going to get to a world where like, liquidity is that rich that quickly. I actually think that the pathway to get to where you're talking about is, there's incremental steps to move forward. So like one thing that I think isn't available right now on most major marketplaces, but it's something that Reservoir supports that I think is a really great feature, is being able to create a bid on a custom set of NFTs, right? So like, let's say I want a doodle. I want any doodle, but I like really don't want a doodle that's smoking a cigarette, right? Like that's a pretty hard thing to bid on. It's not possible to bid on that on OpenSea right now, but because you need a custom set. Or like, let's say, you want a Moonbird and there's like 10 Moonbirds that you want, but they're all idiosyncratic. You want to be able to click on those 10 and like create a bid that's just for those 10 Moonbirds, right? And now see, and just do that with ETH. Like that to me seems like the first like stepping stone towards a world where you then say, okay, I want to create a bid on these 10 and I'm willing to then give you, ETH, but I could also now give you ETH and an NFT and you can create the same type of bid, right? So I think like on both sides of the market here, you want to like think about basically what are the features that are necessary to get you to this end goal. Like I think you're right that in a perfect world, there's like this UX where you log on, you see what NFTs you have, you see what swaps are available to you. Would you be willing to accept these swaps? And yeah, I mean, I think that this will happen. It's just a question of like, what are the most useful features that can help get us towards that world?
Sure.
And I think actually like surfacing what swaps are available for you to accept seems like a bit of a challenging problem. Like just from a UX perspective in terms of like integrating that with the marketplace. But definitely something that's could be tackled and seems really interesting.
Yeah, I think integrating that with marketplaces is probably the toughest thing because they all have their own standards.
Right.
So for you to bid NFTs that's showing on other marketplaces is probably going to be really, really tough. So maybe like you mentioned, like, having your own vertical allows you to do more custom things will be pretty helpful. And that could be done on Reservoir.
Totally.
Yeah. Coming up to almost to an end here, Jason, is there anything that the listeners should look forward to or keep an eye on coming out of Reservoir or forward in the next couple of months?
Yeah, so actually we have something to a little bit of an update that's coming out today. So we talked about bid liquidity. We're really making a push here to like get good bid liquidity out to end users. And we've been focusing really heavily on aggregating bids from across the ecosystem. Actually, later today, we're going to be releasing an experience for users to access all of this bid liquidity. So it's going to be an instant sell site that lets you look at your portfolio, help you understand what bids you have, and instantly sell these into these bids. And part of this is about making a push towards getting this liquidity integrated everywhere. So if you're a developer, keep an eye out for this. It's going to be at instantsell.io when we launch it. So this is going to be like, if you're a developer, you should integrate this liquidity. It's literally as simple as adding a sell button next to NFTs in your portfolio and connecting to the Reservoir SDK and letting people liquidate their tokens into the top bid. If you are a collector, and you're used to having to go across the ecosystem to look at all the different marketplaces in order to, weigh which bid is the best on your token, like you don't have to do that anymore. All of your bids are going to be together. And I think this makes a lot of sense. Like what we've seen is that the top bid on top collections, it really varies across marketplace. Like 40% are on OpenSea, 20% are on LooksRare, 20% are on X2Y2. Like all these things are just going to be aggregated together for you, and you're going to be able to see all of the bid liquidity that you have. So definitely keep an eye out for that. I'll share that with you when we get it out, but that's going to be out later today. A couple other fun things in store. We've got a couple big integrations that are going to be released in the next couple of weeks. So definitely keep an eye out for that. That includes, getting the last little bits of forward put together. So this is going to be, a live protocol pretty soon here too. And super psyched to keep pushing forward. We think we have a lot of cool stuff in store. I think that's pretty much it. If anybody wants to sort of, find Reservoir, learn more, you can find more information about Reservoir at reservoir.tools. Obviously find us on Twitter, and more than happy to chat with anybody that's interested in, NFT liquidity, bids, aggregation, etc.
Yeah, awesome. Thank you so much for coming on and sharing all this. I am pretty excited to learn more about Instant Sell.
Yeah.
I have a friend, his name is actually the guy put us in touch. He built this little tool called Fleur,
Yep.
which is, I believe, built on top of Reservoir tools. Which is kind of, just aggregating all your sales together. So super excited to learn more about the updates and look forward to the launch of these different tools and products. Jason, it's been a blast. Thank you guys for coming. Thank you for coming on and share all the stuff you guys are building at Reservoir, and look forward to working with you guys long term.
Yeah, absolutely. It's been fun. And let's do this again soon.
All right. Have a good one.
Yeah. Bye.
Bye. Thank you for tuning in to LookatMyJPEG podcast. If you're listening on Spotify or Apple Podcasts, wherever you get your audio podcast from, give us a like, a subscribe if you like the content, and we'll see you in the next episode. Cheers.